when I sit in front of the chart, the first thing I do is the daily. I take a look at the daily to see what's going on, to identify any gaps, identify any wicks, whether on this side, on that side. And then the next thing that I do is I highlight the green candle above it and the red candles below it. So as you can see right now, there are no green candles above where we are right now. This is where we are. This is where we are right now. So all the green candles are at or are on the same vicinity as these green candles. However, we do have some down close candle, red candles below. So we have this one, and let's see. So and right about this one right there. So you find the one closest to it, you identify it, you put it like this, and you identify the next lowest closed candle, and you put it right at the open. So that's the next one. And then you identify the last one right here. So usually I'll pick the lowest one or the one with the longest candle. I'll put it right on top here. So there is potential 3 targets, right, on the daily. And as you can see, it is fast approaching those targets very, very, very quickly. So on the daily, this is what I do. And then the next thing I do is I identify any potential gaps. So the gaps is the low of that candle and then the high of that candle. So as you can see, this one right here. And again, guys, this is the daily we're talking about. What I do beyond that, I usually use a Fibonacci and then I just grade that gap that I see here. Gap is important. The wicks are also gaps. They are very important. And then also you have those down close candle. They are also your target. And then try to see what's going on. Usually what you would see is as price is dropping lower, it will come in the middle of this gap here and then take a pause or bounce back up. And then it will get in like in the 75% and then go even lower. And then probably get here, take a slight pause, and then keep going lower and lower on the daily. There are so many things you can put on this chart. So you can get yourself tripped up and get yourself confused. Please try not to. Which is why you always got to denote what those levels mean. Because what would happen is when you drop into the lower time frame and you figure out, okay, what is that? Well, what does that level mean? So you're gonna lose track of what that level means. So usually what I do, so today, that day, that lowest candle you see here, it's October 3rd, and that is the open. So what I usually do, come here into daily target, and then I'll put 10:03. When I drop in the lower time frame, you will see what I'm talking about. Like if you don't have these targets there, you're gonna be confused. You're gonna see a bunch of lines. You're not gonna know what it means unless you double click on it, and we're going to use as target. So there are many, many, many other things you can track here. You can track this wick to see, okay, how many handle. You can grade this wick because this is the longest one. You can grade this wick, but I would not bother to grade this one because we already passed below it. So the next one I would grade is probably this wick. There's this entire range you can grade as well, right? So we can let's use a Fibonacci here to see where we are compared to the entire range because we're still inside that big range. Remember that Friday, I believe Friday the 10th, we had like a big drop. So we're still inside that range, guys. Still inside of it. So this is where we are right now. We're still in the premium. So if you ask me, okay, right now, which way should I trade? I will say go short. That's the best way to do. You short. You can short from here all the way, I'll say respectively until 24,772. But like I mentioned, you have to look at, okay, did it reach this target? Yes. Did it reach that target already at 25,101? Yes, it did. Passed it. See what I mentioned earlier? You was gonna get into that 50% and take a pause. There you go, right here. It's taking the pause. And that gap right here, let's see, 10, 16. That you see the middle of that gap, that 50%, that 50% here is also the 50% of this week right there. Isn't that funny how that works? So the 50% of this entire gap from this week's low to this week's high, that gap we identified here, that 50% is also near that 50% of this week. So everything is fractal. Everything is working. It's like when you look at a seashell, and then you see there's a spiral. There's a spiral inside of a spiral inside of a spiral. If you look at the spider web, there's a smaller circle and then a bigger circle. It's just the same way here. So there's like always like a everything is interlaid on top of each other. Everything is layered when it comes to trading. So you can't be one dimension looking at patterns. If you're just looking at pattern for pattern's sake, you're not gonna get very far. So you have to do all this homework here. And we're not even done yet. So this is just on the daily to see what it looks like. So let me remove this one. So we've established that we can temporarily try to be bearish. So that's our bias. We are bearish temporarily until we reach either the 50% of a gap or of a wick, or we reach London session, the end of London session, which is at 11:30 Eastern. This is where you potentially can see a reversal. This is a daily setup for me. So the next thing that I do, I took a look at the 60 minutes.